Well, this was incredibly insightful, and the thing that stood out for me, and it could perhaps mean a full circle as well, Manish, you said that when you were looking to invest in India, you looked at some of the Indian listed companies, compared them to global companies, and saw the ratios were much in favor of India. But now as we speak, the CEO of Whirlpool recently said that they're doing a valuation arbitrage with India, where they're selling the Indian stock to buy the global stock. So how do you justify those valuations?
Listen, I think ultimately, when you look at valuations in India, and each one to their own, right? But it's driven, people are focused on revenue parameters, profitability parameters. People forget the whole concept of ROCE and ROIC. How efficiently is the capital being deployed? I think a Whirlpool or a BAT or a Unilever does what they have to do. They have significant corporate priorities. They see it's no different than our promoters selling the underlying OpCo and buying a discounted holdco, right? So you do the same thing in a global market. You'll sell the BAT subsidiary here, which is ITC, and buy more. That is their board's discussion. I think if you look at from a risk-reward perspective, is how global allocators look at equity. They say, okay, there's a certain amount of capital that we have which we need to make returns on. Where are we seeing the growth? Where is there a large market? There was a concept some Goldman guy came up with called BRICS. I mean, where is BRCS today? There isn't, right? Now, I'm not a blind Indophile to saying all money would go into here, but today it's difficult to avoid the country, right? I think in the past there were historically issues, whether regulatory, whether transparency, a huge amount on governance. I think at an average level, and both Vedi and Keki see a lot more corporates than we do, but I would see the average level of governance has increased tremendously. And it's not that people have suddenly become better. Promoters themselves realize, agar theek karoge, you'll get a better multiple for your company. So I think, in a sense, it's horses for courses. So global companies should do what they have to do given their priorities. But as far as the India story is concerned, I think the decade is yet to start.
I just add a little bit to what Manish said. One is when you're looking at valuation, you have to look at valuation in the context of the growth. The growth opportunity that you will get in India, and you talked of financial services, and I completely agree. In my view, financial services is where the growth will be the maximum. The valuations are not that expensive when you look at the growth possibilities that are there. That's one. And secondly, to just reinforce the point that Manish made, which is at the governance level. We see this all the time. In 1980 or 1985, when you used to lend to a company, governance, honestly, in many cases was a big issue. Today, when we lend to companies and we see how much focus these companies are placing on governance, because they all realize that if they are well governed, they are perceived to be well governed, they'll get that valuation, they'll get that, markets will be interested in that.